They're calling it the Monday Massacre, the worst drop in Wall Street history.
One Monday in October 1987, global stock markets suddenly crashed.
Hour after hour today, wave after wave of selling hit the stock market. A selling panic, the professionals call it.
It was known as Black Monday. $1.71 trillion were wiped off global markets. Fears rose that this would spark a repeat of the Great Depression of the 1930s.
But this crash of 1987 is not just an American experience. Around the world, stock markets fell faster than a skydiver without a parachute.
Today, also a Monday, 7th of April 2025, markets have also been in turmoil. Understandably, comparisons with 1987 are being made. But the difference is this time that the collapse was not unexpected. The cause is clear. Trump's Liberation Day tariffs.
Black Monday is now in the books, and the question is, what will happen Tuesday and beyond? How will the stock market and the economy react to the worst day ever on Wall Street? What can and should be done now?
In the end, in 1987, a second Great Depression did not materialize. But what about today? Stay tuned. Hello, welcome to The Daily. I'm Tom Cheshire. Today we are talking tariffs and the impact on the stock markets here in the UK, but also all around the world. A lot of that's still ongoing. We're joined now by Darren McCaffrey, presenter of Business Live, and you've been spending the morning on a trading floor. You've seen a lot of red on the terminals behind you, a lot of chaos as well. What's happened today in the UK and elsewhere?
Well, we've essentially had what is definitively turmoil, if you like. I mean, let's start where we were this morning in Asia. Days of really being battered, the Asian stock market. Look at what happened in Hong Kong. The stock exchange there was down 13%. That is the biggest one-day fall they have seen since 1997, nearly 3 decades. Why is that? Well, there's big global banks like HSBC and Standard Chartered based in Hong Kong that really rely on global trade. Then you look at what happened in Taiwan. It is its worst day ever. And as you can probably hear in the background is that confusion continues because we saw big sell-offs in Europe. And then in the United States this afternoon, even more confusion with the S&P 500, the Dow Jones, the NASDAQ going up and down, because no one can quite work out what is next. Have we hit the bottom? Is Trump about to change his mind on tariffs for a little bit? There is utter confusion, and that is why, fundamentally, we've seen all this volatility.
Yeah, I mean, volatility is a polite word for it, isn't it? I don't think we've seen anything like this for a very long time. And, you know, you can hear those voices behind you. It feels very old school, that sort of trading and shouting out. But, I mean, we are thinking old school here. I mean, how does this compare historically? If we think, you know, famous Black Monday 1987, other famous events like the global financial crisis, COVID. I mean, the fact we're even talking about those sorts of historic landmarks shows a bit of where we are, right?
Yeah, I think so. I mean, we're not quite there yet because in some ways, like, none of the fundamentals are kind of at play here, if you like. This is just operating on the basis that no one can quite work out whether what President Trump wants here is a genuine rewiring of globalization and the consequences of that for the US and world economy, that these tariffs essentially will remain permanent, or whether, as we've seen with lots of rumours this afternoon, that actually this is part of a negotiating tactic. That's what no one can work out. And that is why, I wouldn't say it's panic, but it is definitely the sense that people really all at sea. That's why these guys are shouting behind me, Tom. They don't know. I don't know. I'm not sure President Trump sometimes knows. And that uncertainty is difficult, and it's going to cause damage, because the one thing, I talk to businesses every single day of the week in my job, the one thing they do not like is uncertainty.
Our economics editor, Ed Conway's been writing about this today. You know, the end of globalization is a huge thing that we haven't really even imagined before. It was always going the other way, to more interconnectedness, towards more countries being involved in making the same product, but lots of different parts of that. The consequences of that, fine, you know, they can say this is why we want to do it, but there would presumably be a global recession. That's what JP Morgan Chase have said. Goldman Sachs has said they would increase their probability of a US recession if these tariffs occur. this would be really bad news short term and medium term for the global economy. And this would hit everyone. This wouldn't just be about, numbers on a screen, about investors losing money, even if a lot of those investors are retirement funds, are individual investors. But this would be something that really hits people wherever they are in the world. And there would be no avoiding it as far as I can work out.
Yeah, that's true. But, the thing about the market is, it will find a way. And we have to remember, the United States is, of course, the world's largest economy. What I would, though, say, Tom, is that also the United States is only 13% of global trade. And countries like China with high tariffs, or Vietnam or Cambodia, Myanmar and others, they will find new markets. And actually, one of the benefits of that, maybe in the short to medium term, could be the UK. Now, there are long-term consequences about the impact it could have on our manufacturing base if it went on for a long period of time. But also it will force big wealthy blocs, the biggest trading bloc in the world, the EU, to look for new markets. We hear Canada and its Prime Minister Mark Carney suggesting that they would like a trade deal with the United Kingdom. It will cause damage to the United States more than anywhere else, because other countries will then find that they want to be more reliant on more stable partners. So, as always in economics, there are winners and losers, and ultimately the market will find a place for lots of these goods. And the second thing is, of course, this doesn't affect services. This is just on goods at the moment, and our relationship with the United States, for example, is way more based on the services we sell them than it is on the goods, like cars, for example, that we do sell to them.
Yeah, in terms of potential consequences for listeners, so just beyond the markets who might find a way, businesses who are going to get hit by this, for anyone listening, what does it mean for them? Is it something to worry about for their pension pots? Is it perhaps good for mortgage rates because those might come down in effort? With oil falling, the effort maybe to sort of free up the economy a bit more. If you're not sort of a market person yourself, what are the likely consequences of this? What have they been so far?
Yeah, I think, again, it's going to be quite tricky for some people, maybe not for others. In the UK, we don't invest in the stock market as much as they do in the United States, for example. By the way, that's something the government are very, very keen to change. I'm not sure in days like this will encourage lots of people to pile into the stock market with their savings over the years to come. But yes, lots of people's pensions will be invested in the stock market in lots of these big companies that are down today. That is not good news for people who might be about to retire, for example. But also, like certain sectors, if you work in the car manufacturing industry in Britain, it's been pretty tough for a long period of time, or indeed in steel, it's just got a lot tougher. And the government are having to step in and provide extra assistance. We had a very difficult time economically in Britain, really since the financial crisis. We've had to deal with the shock of Brexit. We then had COVID. We have had a war in Russia. And now we have this. And yes, we are quite resilient. But at the same time, we've not had prolonged, serious economic growth in this country. And that lowers everyone's living standards. It just simply does. And the problem with where we are now is that we may not tip into recession ourselves, but if the rest of the globe does, and if the United States does, that is going to weigh on our economic growth in this country, and it fundamentally means that we'll be poorer in the future.
A bleak outlook, and has been a relentless economic battering for so many years now. Darren McCaffrey, thank you very much for joining us. Up next, we speak with Russ Mould, a stockbroker working for AJ Bell, who's been watching events unfold today. What does the market turmoil mean for the UK, and how might the UK respond? Russ, you've been an investment director since 1991, not long after Black Monday in 1987. How does this compare to what you've seen over your career?
It's certainly been a nasty, brutish and short stock market fall. In fact, three of the four major American indices have moved into bear market territory. That's a fall of a fifth, and they've done it very, very quickly. If you look at what the Republican Party is trying to achieve, there seem to be three different strands of thought, and it's going to be interesting to see which one prevails. Some seem to think this is a means of extracting better trade terms from existing trade partners. Some seem to think this is a means of generating income tax revenue so they can cut income tax and fulfil a major ideological aim. And some, the President himself, view this as a means of driving investment into American manufacturing assets, driving American jobs and creating a better economy, in his view, further down the road. Those three necessarily don't sit that easily together. We'll see which one it's going to be. The one that financial markets selfishly would like to see is probably the first one, which is a deal of some kind to try and restore global trade flows to something akin to what we've become accustomed over the last 30, 40, 50 years.
I mean, it's really hard. You've explained that really well. Those three things which, can't necessarily all be true at the same time, but one of them is presumably going to win out. In that context, three different contexts, how is the UK placed? It could change a lot, I suppose, depending on which of those we eventually end up with.
Yeah, I mean, the UK, intriguingly, is in the camp alongside Mexico and Australia that it's not seeking to impose retaliatory tariffs. It's going to look for a deal. The UK has been looking for a post-Brexit trade deal with America since 2020, and it's hoping that this process will continue and lead to a successful conclusion. So I think that's where that is the UK's still ultimate goal, and clearly Prime Minister Sir Keir Starmer doesn't want to rock the boat and get too aggressive too quickly. So that's the UK's great hope. If, in a worst-case scenario, we're stuck with the 25% tariffs on cars and steel and the baseline tariff of 10% and everything else, I guess if you're looking to accentuate the positive, there's a statistic from the International Chambers of Commerce that 87% of global trade does not involve the United States of America. So if you're the UK, maybe you go looking around that other 87% and find trade deals elsewhere with countries who feel they're being badly treated by the tariffs as well, and I would guess probably India is one of those that's at the top of the list there.
Yeah, do you think that is a realistic outcome in terms of like-minded nations, people who still believe in free trade, clubbing together, whether that is Canada, whether that's EU to some extent, although, lots of people would argue the EU itself is very protectionist. But you could see a slight new economic order of people who still favour what are, for want of a better term, the old rules of the trade system.
I mean, I think the longer these tariffs are imposed for at the levels that the President Trump has initially demanded, then I suspect that the more that chain of thought will gather currency, and more that countries will start to look for alternative solutions. In the end, we've seen over the history of the global economy, countries, companies, individuals ultimately adapt to the situation that they find, and a problem is but a solution in disguise. The question is with these trade deals, if it comes to that, is how quickly can they be struck, given that the UK has been casting around for them for the last 5 years without a huge amount of progress, barring I think probably Australia.
Yeah, that's a really good point. And also, UK quite in a lucky position with that only 10% tariff. Has that been reflected in sort of the markets in the UK? So the FTSE compared to, everyone around the world taking an absolute battering. How are the UK markets doing?
I think that has helped a little bit in terms of how the UK has been perceived. The UK stock market is not down as much as the American one, but it hadn't done as well, and it wasn't as highly valued, and expectations were not as high. I think all of those three things are in the UK's favour. In addition, the UK has actually, in terms of its stock market mix, I know it's been pilloried for not having a lot of technology, and it's been pilloried instead for being a bit dull and having lots of defensive things like utilities and consumer staples that aren't very sensitive to the economic cycle. And it also gets criticised for having too many miners and oil sometimes because they're very cyclical and very unpredictable businesses. But in an environment whereby there's uncertainty over global economic growth, having a lot of businesses where demand isn't that sensitive to that is possibly a good thing. And the miners and the oils could come into their own if we get an inflationary outburst, as some economists think we might do because of the tariffs, because under those circumstances, investors generally tend to look for real assets rather than paper assets like cash. Real assets includes commodities. I know the oil price has been very weak recently because of, again, global fears, but the miners, again, could potentially be an asset rather than a potential drag as they've been seen maybe over the past few years.
That's good. So we had the foresight to have a very boring, very low technology stock market, and it might work out well. In the same way, found ourselves in a good place for the 10% tariffs through no real sort of action on our part. I mean, in terms of that action, the Prime Minister was giving a speech today where talking about tariffs, and his sort of music has been, is this a new era at the end of globalization? Is this something we can weather? And I think it was quite strong on diagnosis, but there wasn't much in terms of what we should be doing. Apart from what you've already mentioned about clubbing together with like-minded nations, increasing those sorts of trade links, looking for those trade deals, are there other things we can be doing in the UK economy to weather this a bit better than we might otherwise?
I mean, what's the recipe for economic growth in any market? And I don't actually personally think that tariffs is the answer unless you have these things alongside as well. Gross domestic product growth, economic growth, is labour force growth times by productivity growth, and that's it. So everything that you're looking to do as a leader or as a Chancellor of the Exchequer or Finance Minister, you're looking at those two issues. How can we encourage labour participation? how can we make those workers more productive? Now, in terms of encouraging productivity, you're probably looking at things like targeted tax breaks for investment. You're probably looking at things like trying to stimulate research and development, for example. Those are the really positive things you can do for the long term. You're looking at infrastructure, transport access. In terms of encouraging labour participation, then you're into the deep waters, whether it's education, whether it's things like tax breaks for childcare. All of those are very, very long-term solutions to what is potentially a near-term challenge. But if you're really looking to achieve something down the road, that's where you've got to be looking.
Russ Mould, thank you very much for joining us.
My pleasure.
That is it for today. You can find more of Darren's coverage over on the Sky News app. Before we go, though, we have a favour to ask. We'd love to know a bit more about what you like and don't like about our podcast. If you've got a spare 5 minutes, you can let us know via the survey link in the podcast description. Mark Austin will be with you tomorrow. See you then.
Donald Trump is heading back to the White House.
Together we can truly make America great again.
We are in for an unpredictable but fascinating 4 years.
And we're going to be following every twist and turn for the first 100 days. We'll be bringing you the latest updates and analysis first thing every morning. So join me, James Matthews.
Me, Martha Kalnick.
And me, Mark Stone.
For Trump 100 every weekday at 6 a.m, wherever you get your podcasts.